Thanks a lot for joining us today. We had a great day yesterday. Now we are reaching the second part of our day. A little tired, but then we want to keep talking about RWAs, how they change our lives. The title of the presentation is, "What better place than here, what better time than now?" This is a part of a lyrics. People my age might remember it. It's a song about a revolution, and it says, it has to start somewhere, it has to start sometime. What better place than here, what better time than now? I'm part of a software development company that's building tokens, cryptocurrencies for almost 10 years now. And the first time I've met security tokens was about in 2017. Back then, we were really careful, not including any security components in tokens, but we were secretly dreaming of uniting the real world with the crypto world and generating value by this merger. I personally believe that 2025 and the Middle East, US, and to some extent Europe, these places are now the right place to do RWAs. We're at this inflection point in 2025, and I believe from this point on, we'll reach an exponential growth. This is the time, now everything will change. As I mentioned earlier, we had like really good market fit with stablecoins, and then we had Bitcoin, a cryptocurrency which could not be sanctioned, it could not be stopped, and it was decentralized. But we're at this place where retail interest is diminishing. We did our best to introduce Web3 to the world, but now it's time for companies and governments to realize what kind of revolution we were building. And in 2025, we see this rapid growth. We have some really good news coming from the US. The President of the United States is very proactively changing the crypto space. We have a new legislation on stable coins. From Dubai, we are hearing that we have this nice projects coming up in real estate. The MiCA legislation in Europe has changed how we're going to deal with stable coins, how we can own them. And some of you might have heard about it. A few days ago, the Housing Administration, the Federal Housing Administration in US declared now cryptocurrencies can be used as a collateral for mortgages, which is actually a big news for us. When we look at the landscape of RWAs, what we call real-world assets, we see that private credit is really important. Private credit is an important part. We have commodities. Commodities are coming up. And we see tokenized treasuries as well. So the banking industry got really interested in real-world assets. And what they're giving us is what they're used to. Financial instruments are coming on chain. But we'll look at what's still required. There is the interest, this corporate interest coming from companies and governments, but some other components are required to continue this exponential growth. So as I mentioned, stablecoins are a different animal, so we love them. I think they have great market fit. USDT is the king, and it has its own chain. Tron dominates USDT. And now we have new coins coming up. And as you might have heard, now companies in US will be able to issue their own stablecoins. So other institutions will be able to issue them as well. So I think payments, cryptocurrency payments using stablecoins will be part of our lives. Some people call them real-world assets. We've been so used to them, so I don't consider them real-world assets. But when we look at this category, they always dominate. They're still very big. We're talking about hundreds of billions of dollars for USDT. When compared with the other components, for example, private credit is about like $9 billion. Tokenized treasuries, some of you are very familiar with BlackRock's Biddle Fund, which gives you exposure to US Treasury bonds, is about like $5 billion. And then we are seeing these like emerging real estate and commodity projects, which I personally believe are real-world assets, and they will actually create this revolution. So we are not there yet. They will be the game-changing component of our, let's say, transition to a tokenized world. And I think real estate, and especially gold as a commodity, will change the way we do trade and the way we do business. So how how is this changing? As I said, we've been struggling for almost 10 years to do this, okay? So there were all these networks. They really believed in tokenization. There were projects like Chainlink. They've been promoting tokenization. But it seems BlackRock's change of opinion, Larry Fink's opinion, that we're going to live in a tokenized world. The markets will evolve into a tokenized version of themselves. That was a changing point. And they were able to convince other people. And as I said, a crypto-friendly US president also helped. And now we are seeing lots of new changes every day, which are revolutionary. We have a token issued by the First Lady, which is interesting. We have the president of Argentina issuing a token. These were unthinkable experiences. We never expected them, but now they are part of our reality. But the hard work has always been regulatory clarity. So people have been working hard. These are like boring things, issuing laws, creating regulations in US, in EU, in the Middle East. The RWA concept is always local. It's bound by local laws. So it was hard work. You had to do it at each jurisdiction differently. And there is no common concept of a tokenized real estate or tokenized commodity. So people have to work. And then when we talk about legislation, when we talk about how to do these things, we have to think about accounting. We have to think about compliance. They might sound very boring, but they're actually the fuel of this exponential growth. And then we said we have like about 200% growth in the last year, but we are projecting to go to trillions. And then I'll show you some numbers as well. And the only way to do it is if we conform to laws, if we make sure that companies, institutions can own these tokens, they can trade them freely. This is the hard part. And AI is an interesting concept. AI needs data, and it's actually much easier to deal with blockchains, with tokens, when it comes to accounting, when it comes to legislation. Combined with AI, it actually makes the government's life so much easier. And now they're realizing, instead of preventing this change, that it might be much more beneficial to them. So it's analyzable real time. So at any point in time, you can figure out how much a company made, how much tax you should collect from them. So this is only possible through tokenization, a transparent ledger that gives you this data. So what are the benefits of RWAs? Actually, these are the benefits of crypto. So at today's world, we don't want to be stopped on Sundays. We don't want to be stopped during holidays, okay? Crypto is 7/24, we're used to that. And then right now we're in the city of Istanbul. This is a city where you can go to a barber shop 3 o'clock in the morning. You can bring your pet to a veterinary 4 in the morning and pick it up later on. This is a city that never stops. People, you might assume, need the money, but they're used to working long hours. They work hard, they're working long hours. Why should they stop when it comes to doing payments or collecting money back from their bank? Okay? So they're working hard, they're expecting the financial system to keep up. So we don't want banks that stop at 5 p.m., we don't want banks that stop during Christmas or like Ramadan or the New Year's Eve. If we are working, if we are investing, they should follow up. So this is, I think, the most important part. There's always this information difference when making investment decisions, and then it seems so that the regulation is always on the side of banks. Now RWAs change that. The data is there. If you want to analyze it, if you want to take the opportunity, RWAs allow you to tap into that potential. And as we said, it's very efficient, and it's transparent. It's all there for you to pick it up. This is the nice part, but then there are also harder challenges for us. As I said, regulation is always the hardest part. So ownership of a house is totally different in a state in US. It's different in Massachusetts, it's different in LA, it's different in Istanbul, it's different in Moscow. But then if you want to be able to tap into these assets, we want to reach the real world, then we have to have unified legislations, which we don't have. And we live in a world of conflicts, political conflicts. It's not easy to come up with legislations that fit everyone, but the more we do that, the more we'll be able to reach a tokenized world. We have some centralization risks, but I consider this like a much smaller problem when compared to liquidity gaps. So we've been doing some projects recently. So we tokenized some classical cars in US. I started this journey in 2017 for a project in Germany where we were trying to tokenize investments in startups. We right now tokenize some cargo ships. Always the issue is we're facing illiquid assets. Okay, so crypto is so much fun because I can just sell my Ethereum at any time, and then I can expect certain price range. It might be sad if I sell my Ethereum for $2,000. Okay, fine, but if I can't sell it at $1,000, that's a big crisis. That's a big no. Okay, so the world must be collapsing. Okay, crypto is always liquid. There's always some buyer who is willing to buy my asset at a certain price. This is not the case with RWAs. Okay, you might be sitting on a piece of land or like a piece of car or a piece of business and at a certain price range, and maybe you might not be able to sell it for days, weeks, or months. Okay, so we have to create this infrastructure where these assets become liquid. That is, I think, the most critical problem we have to resolve before we reach this tokenized level. At the beginning of the talk, I said, like, what better place than here, what better time than now? Let me give you some numbers about gold in Turkey. Right now, we're working on a project tokenizing gold for like big exporter of gold in Turkey, and then I came to learn these numbers. If you look at, do you know Paxos, right? Paxos Gold and then the Tether Gold, you heard about them. They have about like 8 tons, 7 tons of liquidity. So that's their market cap, okay? In total, that's actually 200,000 tons of gold that's moving around in the world. And as you remember, Bitcoin was created from Bitgold. So this was an early project that fueled the creation of Bitcoin. And so that it was always the attempt to tokenize gold. Bitcoin is actually an attempt. But there's something really nice about Bitcoin. It's a closed system. You don't need external references. You don't need to hold gold. But always the idea was we need to tokenize something like gold. That was the idea. Now, in Turkey, we have about 8,000 tons. And then every year we buy about like 500 tons. We're a relatively small country. There are like 80 million people compared to China or India who are buying like 1,000, 1,200 tons of gold. But the capability to tokenize gold will change this RWA space. I personally believe this is a big game changer if you're able to do that. What's preventing this? Typically, banks offer you some representative gold, right? You can just buy it, and then you can get exposure to that price. But we don't know if the bank actually has the equivalent of that gold. That was the problem with Tether as well. We never knew if they had if it was backed or not. So any institution or company that resolves this redemption problem, so I just give them my token, and I can redeem a kilo of gold. If I can do that somewhere around the world, if it's easy, then gold will be tokenized. And then just Turkey alone will create about $1 trillion value here. Okay, so these numbers, 8 tons, 7 tons is nothing compared to the overall gold trade in the world. Most of it is in London. About 70% happens in London. Some of the gold is in Singapore. Some of it is exchanged in the Shanghai Gold Exchange. And the futures market is in New York. And daily, 27 million ounces of gold are traded. Now, we need an exchange for this, right? We need to be able to exchange this tokenized gold. Maybe Binance would be it, like the largest cryptocurrency exchange, or OKX, or some other exchange. But the thing is, our infrastructure is actually suited to handling these things. We're used to trading all the time. At night, it has to be super fast. We don't want boundaries. We don't want to spend too much time with KYC, too much AML controls. We want it to be fast. We want it to be accessible. But then I wonder who's going to capture this market. So is it going to be the banks, the traditional finance people, or is it going to be our new folks, the Web3 people? Okay? Banks are really excited about tokenization the last few years. So we just attend these events, these beautiful ladies, these handsome gentlemen, all dressed well, coming from financial institutions. They're talking about tokenization. It's wonderful. They think all this gold, all this real estate, all this agricultural things, commodities, and all kinds of tokenization will happen at the traditional finance world. Okay? So brokerage firms, insurance companies, credit unions, they are really excited. And our folks have a different look at this. So we have networks, L1 networks, we have their bridges, we're trying to scale them with L2s. What we have is we have DEXs, we have lending protocols, and our folks say, dude, this is so old. So we are already building the software. So what we did as NFT marketplaces, like just trading monkey pictures, we were actually building the infrastructure for trading houses or stocks. Anything that's non-fungible can be traded on OpenSea. The issue was always regulation, but the infrastructure is there. We just built it. All we have to do is just take it over there, and I wonder if these institutions will survive. My take is, it's neither of them, and it's both. Well, we won't have traditional finance, we won't have Web3, we will have some evolutionary thing, a marriage. So it's the case with marriage, you always have to make compromises. I guess it will be on-chain finance. So again, regulated, top people, top talents, are really good, but then it will be young, they will be dressed differently, and then it will be a merger. This is what I'm expecting. And there are some leading platforms that have been pushing this for quite some time, but then we might see some new players. Okay, they have been talking about this for maybe 5, 10 years. I'm not sure if they will be the winners. Okay, and even if they do, I wonder if their token prices will reflect this change. Most likely, their stock prices will reflect it. So Avalanche is actually Avalabs, and then it's a US company. Most likely, it will be traded on NASDAQ, and investors of Avalanche, Avalabs might be the ones that benefit from it. So as retail people, I'm not sure if the tokens will reflect the change here. So it will happen in the background, and regular investors will benefit from that. But the future outlook is very positive. As we mentioned, we are going to 10 trillion value by 2030, I believe that. As I mentioned, Turkey's gold is just 1 trillion. It's as I said, small country, interesting country. Per capita gold ownership is very high, but then even if we can do these changes, there's value there. But we have to keep working on regulation. I know it's hard, it's tough, but that's the winning part. So institutions, companies can own these assets, and I think we have a great, bright future. So thank you very much for listening to me. Have a great day.